Hi, good morning, everyone. This is Julie. It is Saturday, September 30th, so the markets are closed. Take a look at the crude market in particular on a weekly recap and just generally talk about the markets in general, but emphasizing crude. So, with that said, we have a lot to talk about. So, let me close this. And the first thing I want to mention is there was an analyst on Bloomberg who came out, a young lady, and she mentioned that there were 7.6 billion in outflows from the equity funds this month, or the last 14 weeks, she said specifically. So that's money, 7.6 billion outflow of the equity funds out of the US equity funds. And for a quarter, it was 23 billion for the quarter outflow. And she said an inflow for the rest of the world, that's how she said it, rest of the world. She said there was a 41 billion inflow. So the equity funds are moving out of US equities and over to the rest of the world, whatever that means. And I've heard chatter that people are chatting up European equities, which may be a short-term play, but keep your eye on China for this European play because that's their export partner. And once China starts tightening its credit, as soon as you start seeing the first headline, I would dump those Euro equities because that's their money flow. So right now the money is flowing out of the US into the rest of the world, 41B inflow. So we just have to go find it, right? And here is on the CME groups page, the daily exchange volume and open interest. And you can see each day of the month what the futures volume was. And it is ranging between 16, 17, 15. There was a 13. So something like, oh, there was that a 12, yeah, 12 at a low on September 18th. So, and then you can look at by the contract, the number of instruments. So agriculture has, 1.383, energy 1.706. These are net positive change, 77,420 volume. And you can see in the equities right here, negative 685, 389 on the volume. So what the analyst was saying is definitely being reflected on the CME's website. So that's a confirmation. Okay. So then let's look, if we're right now want to concentrate on energy, we've got more contracts coming in. I don't pay attention to the producer merchant processors, and I don't pay attention to the swap dealers. I'm over here looking at managed money and other reportables. And managed money for crude. You have long, short, and you can see it's net long on both my categories. And it's a good way to get a idea of what they're doing now. CTAs, I can show you spreadsheets of their pathetic performance results, just like ours are from time to time, everybody. And that's why we do these market reviews, to try to figure out where's money going and what direction is it being traded in. So weekly, daily, 60-15. I like to look at the daily first before I go to the weekly, just to get my levels. So you can see that we had this conglomeration, 3-month sideways, just crap. I can remember bitching my way through that. and then it breaks out, pulls up, breaks out, pulls up, breaks out, pulls up. My Keltner, I have it on a fast speed because I want this part of the move. I want it when it breaks out of that channel, that upper channel. I'm waiting, and that's the pie that I want, or when it breaks down out of it. And you know, I'm a day trader, so I'll look at a 10 or 15-minute chart, and when I can get the moves here, this is what I want. So why am I telling you this? Because I want you to do it too, so that we can all make money. There you go. And let's look at the weekly real quick. As you know, we came down from 2014 pretty vertical, and then we've gone sideways. And just depending upon where we are on this sideways, let me remove all my drawings. So there I have my 3 daily levels on my weekly chart, and the first thing I notice is my momentum is going up, but the slope of the moving average is not matching it. The slope of the moving average is sort of flat. So that is not indicative of a trend. So if it moves higher from whatever pressures in the market, or because crude is not really a technical market to trade so much, it's more of a fundamental market to trade, and the traders rely on the EIA report. So let's take a look at the calendar. And while I'm looking at the calendar, I wanted to show you that the website's changed. The ecosystem vendors are being included on NinjaTrader's new website next week. So make sure you go to the ecosystem website, and it's going to have a new look next week. So total new design. So I had to provide them with a spreadsheet of a bunch of stuff, just like everybody, all the other vendors did. And then so it made me have to redo the website a little bit, just the tabs. So economic calendar is over here on the bottom right now. And last week, you can change the date. Well, here it was. Let's look at that EIA. First, the API report on Tuesday. Here was the API report. Wednesday, so it had a beat. It showed better than expected inventories. It showed a better amount of draw than they were expecting. And there was a very interesting chat this week on that subject from Eric Townsend. And he brought this point up that he apparently watches those numbers on the tankers and the storage, and who's buying and selling, and what's being marked as inventory or an outflow. And he's basically saying that there was a 10 million barrel weekly inventory draw that doesn't match his numbers. And there was quite a conversation on it in his Twitter feed, which you can follow. But apparently they're questioning the EIA report. So y'all might want to keep an eye on that. And that may have some impact on the numbers. I'm not sure. All I have is the chart, and I'm above the outer band, which is what I want to be on the weekly basis. I just want it to keep going back up. The support level for this is right here at about 50.89. Now there is a gap that might get filled, and that gap is at 50.68, and the high of that is 50.76. So that could be a high probability target if you're coming in for a retracement and you have a big ass red bar sitting right there on the daily at one of these inflection levels, but in an up momentum market. So we'll see if price comes back to fill that gap or just chops sideways. But there is more interest, as we saw on the CME's website. There's more volume coming into energy, and which is always good. You want a higher volume for your instrument being traded. There is a way I like to do trend lines, and I'll show you at my NinjaTrader trend channel, and just connect the bottoms. And I go to that first pivot level from the bottom, and this is just standard NinjaTrader indicator, and gives you your trend channels. And I just set mine to 25, 50, 75, minus 25, 50, 75. I guess I get it up a little bit, but you just want to see where you are on your standard deviations. And as you can tell, sometimes the instruments will trade inside these bands, or you will know where an outer level is, and a lot of traders will try to hit this area on the smaller time frame. It can get bouncy. 15-minute, you can tell when a market is sideways and just sit on your hands. That's not what you want. I mean, markets are either going to go up, sideways, or down. And you want that direction or that right direction. If you're going to be a range trader, then only do your support resistance on this sideways area. So make sure there's a sideways area there to do it in. Like on the daily, right here, sideways chop orama. So that's where you do this. You came up to the area, you went sideways, and then you come down. So that's your 1, 2, 3 that all markets exhibit. I wish I had a better color for you, but y'all know what that stuff is. So just keep an eye on your daily and find out where you are in the market, the current conditions, and we are sloping up on more volume. And so you want to stay with this upslope, either with trend or on a pullback. And you have a bear bar, so it was going against the trend. So you're looking for an area to go long, and that would be at 50.88 or on that 50.68 level, somewhere around there. generally. I mean, it's just sort of like a zone. But that would be a target to trade into also. So that's it for crude, and my general market explaining to do with the inflow and outflow. Um, I'm just saying if there's going to be like a short-term trade in the European market, I mean, you can trade the 6E. It might get a little bit more volatility. Um, as always, the yen is something good to trade. Soybeans were really good. They had a fantastic close Friday. I mean, that was a great move out of its range. So, nice little pop. And that was a late move too, from 11:15 to 12:30. So into the close. Nice little reward for the bean traders, right? So that's all I have for you guys. Thank you so much, and we'll talk at you soon.